Morning traders. Well, let's have a look at the normal three. So we'll look at the Aussie, we'll look at Wall Street, and we'll look at the DAX. Really just get a view of what happened yesterday and see if we can see anything that's exciting for the days coming up. So let's start with Aussie on the weekly chart here. And what I want to do is just show you something around Ichimoku. So a lot of people, how you trade the Ichimoku is when we break through price and we've had a crossover. In other words, Tikansen, which is the blue line, and Kijun-sen, which is the red line, have crossed over. You can see there was a crossover there, that pointing down, and we've broken through. So a lot of people would be saying this is opportunity for some more bullish action, and the next logical place where price will hold up would obviously be along the cloud. Wait, get the correct picture here. So that would be the next logical place for it to hold up. Okay, but remember, Ichimoku is really a lagging system. So everything that it's working with is moving averages. So you're calculating moving averages and using moving averages to create what you see, as we know, the cloud and Sikuspan and Tikunsen and Kijun-sen. So you've got to keep abreast with what's happening in price action. So the first thing that you'll notice here is this is a major uptrend that started in 2016. Okay, came up, we created a higher low, followed by another higher low, created a higher high, followed by another higher high, another higher high. Okay, so that is pretty much the trend that we're following. And it's also the 100 moving average on the weekly. Okay, so there's no real divergence here. It's moving down. OBV is moving down. Price is moving down. So that's pretty solid. And then I think just want to first add something else here. So do that. And we'll do that. Okay. So we're in a downward bear channel at the moment. Let's just move to the daily. Clean that up a bit. Right, so on the daily, obviously we are quite far below the 200 moving average. We've had a 50 and 100 day 100 period moving average on the daily, and there's been a crossover there, right in the cloud. And let's just have a look what happened with our levels. So obviously that's the level that it's flirting with at the moment. And remember yesterday we said there's another level there. So there we've got 2 touches, we've got 3, 4, 5 touches there. Okay, now we're sitting on the level 5, 6, 7, 8. So we've got 9 daily candles that are playing at this level. So we do have not really divergence, but we have kind of bottomed out on this. And Tikansen and Kijun-sen are still flat. In terms of moving averages, pointing down slightly, the cloud is flat. So when we're flat, we're typically going into a range. And remember from yesterday's video, we are looking at this range bar. So we're looking at this candle of Wednesday the 28th, which is a range bar. So a break to either side of this is going to determine in which direction we're going. Okay. And 4 hour, nothing much. We're on this weekly line. I think let's just change that to a nice bright red and really thick, so we don't forget it. Often I find if you don't draw these long-term trend lines, you tend to forget about them. And then when price does something on the trend line, indicating bullish action, for example, in this case, you normally miss it, and then you're waiting for the first pullback before you can get in. So I tend to try to keep those lines in pretty bright so we can see what's going on. So you can see there's a lot of action, price action is happening right on this line. So the question is, are we going to break through or are we going to bounce again? So this will be the third touch on the weekly at this level. So it could be another bounce or push down, or this could hold and move up. So right now, in my eyes, Kijinson and Kijinson are flat, they're far apart. So it's indicating that we're going to either continue ranging or we're going to start moving a little bit to the upside. Maybe attack this gap first, which is the 38.2 extension, bounce back and then hit the 100, bounce back and then hit the 161, bounce back, and then this area here is where the critical resistance is going to come in. So right now, my bias is for looking for a long, and I am actually long. I got in long at the close yesterday at around just right here, 48,100. So I'm long at the moment, and I've got a stop below the 138.20 extension here. So quite a wide stop, but it's a very small position. So it's not really, not a major loss. It's well below my 2%. Okay, the next one is Wall Street. Let's just have a look at the weekly as well on Wall Street. For Wall Street, we've had a crossover. Now, the interesting thing about the Ichimoku cloud is the crossovers that happen. So in a bullish trend like this, and we have a crossover this side of the cloud, it doesn't carry as much weight as if the crossover happened underneath the cloud. Okay, I'll just be wary of that. So a lot of times, the Ichimoku cloud, the Ichimoku components will offer support and resistance. If you remember in my video on the Ichimoku, the T-Consent offers resistance. You can see in this trend it offers resistance. So every time it hit there, it balanced, it bounced off, came back, bounced off. If it did break through, let's go back a little bit. If it did break through here, it was a bounce off the Kijinson. So normally, that's why I say T-Consent a level, Kijinson a level, 50 moving average is a level, the top of the cloud is a level, the 100 moving average is a level, bottom of the cloud is a level, and then lastly, the 200-day moving average is a level. So that's kind of the way Ichimoku works, and it's always good to just take cognizance of it. So there is a crossover. Agreed, there's a bearish crossover, but the context of that crossover is what you need to look at. Okay, so on the daily, let's just get our daily levels in. So remember what we said, there's a level there. And you'll notice that my lines from yesterday's video are gone. And there's a reason for that. I draw them every single day so that I'm aware of what's happening with price at all times. Otherwise, we tend to have the lines in and we forget what those lines actually for. Okay, so a couple of things. So we're at a level here, okay, this previous breakout in this area. We are on the 200-day EMA, which is quite critical. The bullish connotation, so the bearish connotation of this is that we're using T-Consent as resistance. So that's the only concern that I have. T-Consent is flat, the cloud is flat. So that's indicating that we're going to be moving sideways. If T-Consent and the cloud start pointing to the downside, then this thing's probably going to make a really good attack at the 200 to break through. Okay. One thing that I can see here is we either have a flat bottom triangle here brewing, or we have a megaphone of sorts brewing. Okay, so megaphone meaning that we have a trend line there, and this is not a trend line that's the same as this one. So if I copy that and put that onto price, you can see how price extends below here in this area. So So if I draw my trend line that way, they're moving apart, so therefore looking like a megaphone. Okay, regardless, it's still a channel, still a downward channel. Doesn't matter how you look at it. So what I'll typically do is just copy that. I will just add that in there and ignore those little tails to the part because it is a channel. Whether it's a flag or a megaphone or a channel, same thing. It's still a bearish channel. Okay, so I'm still looking for price to bounce off this area. It's looking pretty good. So we've had a daily engulfing. We've come back. We've had an inside bar here now from yesterday off support and the 200 EMA. So there's definitely some scope. And if we look here, price moving to the downside and the OBV is moving to the upside. So there's diversions. We have diversions there and we have diversions there. So on the daily, we've got diversions between price and the OBV. We're on maybe quite a big support level. Next big support level will be just below it, over there. And we're also on the 200 EMA. So there's a lot of support at this area with diversion. So the buyers are stepping in. Okay. So the first order of business is to break Tecumseh, and then to attack Tecumseh. So that's kind of what I'm looking at. If we look at the 4 hour. Okay, so the 4 hour we are above Tecumseh, which is a pretty good sign. Sequence span is now inside price. So this brown line here is inside price. And when it's inside price like this is typically going to range. So from this perspective, we're looking at more ranging. So probably another pullback, hopefully a pullback into this area to create a higher low. If we get a higher low, then we're starting to set something up for a move to the upside. But at this stage, it's still looking like a bit of a range. And again, you can see how the cloud offered resistance there. So we came up, the 15-moving average offered resistance. We tried again, the cloud offered resistance, came off, back up the 50 again, holding up price. But I think that the interesting thing is to see what's going to happen later on. And lastly on this one is we have price moving to the downside there, but we have versions there. So OBV is moving to the upside, price is moving to the downside. So this is basically what I refer to as continuation diversion, which means there's another leg down still coming. And the down leg there's a couple of areas that it can target. And let's just use a block here. So obviously the first area is there because we have we've got that tail there, so we've got a breakout, and then we've got this tail here. So that's the first area. And if we just look at what the Fibonacci extension is of that area, we'll see that that's a 50% Fibonacci of this up move. So that's kind of what I'd be looking at. And anything that I see happening, any sort of bullish action in this area is definitely something that I'll be interested in taking a look at. And I think let's just drill down to the hour on the Dow so we can see. So from an hour perspective, sequence span has broken through price, but it's below cloud. But we need to get through cloud as well for us to be fully bullish. We did have a crossover here, and Tecumseh is above Tecumseh, and we also have the top of the cloud here. So yeah, so there's a lot of things happening. None of the moving averages have crossed over into a bullish crossover, but they are going flat, which is a sign of either ranging or a turn is about to happen. So yeah, so I'd watch this. I'd expect us to come back into the cloud, maybe even find some support on the top of the cloud. That could also be interesting. And then watch it from there. Okay, and I think the last one is the DAX. Let's just move this to the weekly as well. Okay, so The DAX is quite an interesting picture. So here's a great example of when prices in the cloud are matching weekly. Basically, everything's neutral. So in other words, we would be going sideways, which is what we are doing. We're going sideways, right? We are using the 100-week EMA as a support line. Tkinson is pointing to the downside quite aggressively, but Kijinson is flat on the weekly, and the cloud is flat on the weekly. So this is just an indication of sideways movement. So probably within this cloud, still moving more sideways on the weekly. However, we do have quite some diversions on the DAX. So if you look from there up to there, and essentially price is flat there. So that is still diversions to the upside. So that's indicating that a bounce up is coming. So if we just drill down to the daily now, okay, very similar picture here, which is not surprising considering that the Dow and the DAX are quite well correlated. One thing I want to show you here is I normally draw my trend lines on the first two touches. So there's the first touch, not quite exact, so let's just get it exact. So I would say there and there. So there's my first touch of the trend, there's my second touch. Okay, this is the third one, try to go through, failed. Over here we had a breakout, and came back in, and we had another breakout of that trend. And we've come back. We could argue that this is now testing this breakout. Okay, this trend here is a different trend. And again, there's my first touch, there's my second touch. So I always take it to the first and the second touch, and then whatever happens after that will either create a new trend line, so a break and a retest, or it will maintain that. So right now we've got this trend. So this long downward trend that I've drawn in here, essentially it was in play until here. There was a break, broke back in, broke out. So that's the second break, and this to me is a retest of this downward trend. So you can get rid of it. It doesn't exist anymore. This is the next trend line. Okay, so again on the daily, the cloud is flat. Let's see the top of the cloud is flat. Moving averages are starting to get together, right? And often when on the DAX, especially on the DAX, when the moving averages group it's almost like a Bollinger squeeze. There's something about to happen. Kijinson was flat. Tkinson is moving away slightly, but they are grouped quite closely together. So again, do we have a flat bottom triangle here? So a break below here would confirm that. Or alternatively, do we have a consolidation phase here or a move to the upside? On the daily, so not really any continuation diversions here. Nothing else really to write home about apart from this divergence here for a move up, but we have started to move up. So okay, so on the 4 hour, so yesterday we saw how we were touching the cloud here and the 100 EMA, and then we fell off, found some support down the bottom here and moved up. So there's a lot of barbed wire here. So in other words, a lot of tails. You see every candle's got tails to the upside, tails to the bottom side, which always indicates confusion. Okay, so buyers and sellers are not really understanding what they want to do. However, there are a couple of things that you need to be very aware of. And the one is Seiko span. Okay, so this brown line, Seiko span is above price and it's above Kijinson. So essentially, Seiko span has that much to work with. So in other words, it can move up here in white space until it hits the cloud where there will be some kind of resistance. Okay, and you'll probably find when Seiko span hits here, price would probably hit this resistance line at the same time, because Seiko span is lagging 26 periods behind. Okay, like the cloud is 26 periods ahead. So that's the one thing. So it does have some freedom to move to the upside. we have had a bullish crossover inside the cloud. So we actually had it outside the cloud. We've come back and it bounced here. So this is essentially a crossover as well, okay, which is a bullish signal. That's a bullish signal. The cloud itself hasn't crossed over, so that's not really bullish. So it's 2 out of 3 at the moment. The other thing I want to mention is if sequence span moves along this green line to the cloud is very thin here, so it's very easy for it to break through, okay, which is a pretty good sign. If sequence span was moving to a cloud that's as thick as this, you can pretty much guarantee it's going to take you some effort to break through here. So it'll offer a lot of resistance. So that's not going to offer much resistance. And the only negative factor here is that we have price moving to the downside and we have OBV moving to the upside, which is indicating a continuation to the downside. Okay, so that's the only worry I have for getting long at the moment. And let's just do that. Remember, we had this channel in yesterday. Copy that. So like that. Delete. So we are still inside this channel. Okay. Concerning bit is that price is, we didn't really get back up to create a new high. So we've created a lower high. So the question is, are we going to form a head and shoulders here? So here's the shoulder, here's the head, and then a shoulder coming down here, which would break this trend line, which would validate this as a flag with a continuation move to the downside. And if that continuation plays out, we're looking at a move to, let's just say, 11,600 area. And if we just get to the daily, put that in, and put that in. Okay, and then we have a Brooks gap there as well, so just put that in there. Right on, bang on 11,600 is the Brooks gap. So that's pretty much what the bears are targeting. They're targeting this area at the moment, and the bulls are obviously targeting a push to the upside at the moment, and they'll have a couple of targets. Basically, they'll have a target sitting there, they'll have a target there, and they'll have a target there, and then lastly, they'll have a target there, which coincides with some moving averages, and it also coincides with the top of the cloud. But yeah, so I think touch and go for the DAX at the moment. I'm still fairly bullish, so I'm not going to jump in on this. I'll wait for further confirmation. Typically when it does move, it does these big swings up and down. This could play out to the downside, or it could break to the upside. For me, it's a really touch and go at the moment. So I think the crust of the matter is going to be see what price does today, see if we can stay above Keeganson and above the cloud, or in the cloud, and see if we get an opportunity to break out. Anyway, so that is the 3 for today, and let's see what happens today. I hope it helps. Catch you guys later.